Hello and welcome to this month's market update. It is July 2020. We're talking about real estate and all things that are involved with it. I'm going to do my best to keep this brief, but before I begin, I hope that everybody had a fantastic 4th of July and that you got some rest and relaxation and got to see some loved ones. This month we're going to cover briefly some of the market overview. There is a lot happening, so I'm going to just kind of skim over it, so to speak. We're going to cover some important notes on jobs, home equity, and the buyer showing status. You know, how many buyers are out there looking on the market right now currently for a home. And then we're going to jump right into the LA County housing numbers, and then we'll do home pricing, condo pricing. And this month I'm going to also jump into apartments, because I want to take a look at what is the actual rental supply in Los Angeles and how is it affecting and the pricing and what needs to be done to make adjustments there. It is important. It says a lot about the market, so we'll give it a brief overview. That said, let's jump right into it, shall we? This past month, we had an expectation of 3 million jobs being added in June. We blew right through that with 4,800,000. It posed economic gains in some of the areas that we really needed it, including the hospitality sector and the retail sector, allowing for some growth there. It brought the overall unemployment rate down to 11.1%. This is really great. And when we start to look at that 11.1%, we look at something called permanent unemployment and temporary unemployment. The factors with permanent unemployment is typically people who are leaving the workforce. Now, this is not necessarily just anyone, but the factor is that they usually have declared that they've stopped looking for a job. This could be for a myriad of reasons, including like taking care of a grandparent, taking care of kids, staying at home, aging out of the workforce, or going back to school. All of these are considered permanently unemployed until they re-enter the workforce again, and they say that they are actually looking for employment. So not something to freak out about, as it could just be people are staying at home. U.S. job growth surged last month, underscoring the economy's capacity for a quick rebound if businesses continue to reopen and consumers regain confidence. A recent coronavirus spike, however, could undermine trends captured in the latest jobs report. We are seeing that in California right now. We are experiencing a spike. Gavin Newsom today announced that we are going to, for 3 days, close all indoor gatherings and indoor activities related to public spaces. That includes gyms, restaurants, bars, indoor protests, all that. It's basically suspended for 3 days as they try to assess and slow the spread of the coronavirus, rolling back what they had previously opened. Restaurants that have outdoor seating, they're still available for service, so at this time. When we look at forbearances, this is one of the things that people are really curious about right now, especially when we start talking about foreclosures and the potential for foreclosures in this marketplace down the road. Forbearances are basically where people are kicking their mortgage payments down the road and then working it out to having it stacked on the end of their mortgage. There's a lot of forgiveness going on given what's happening in the marketplace. However, everyone seems to think that it's going to blow up and be some big deal. Right now, we're not seeing that. And the reason why we're not seeing that is in this slide, because 77% of people who are dealing with forbearances right now have at least 20% equity in their home. Well, if you have 20% equity in your home, you're not going to go to foreclosure, you're going to sell your property. So that's probably likely what's going to happen with the properties who are deciding to go into forbearance. The high level of equity provides option for homeowners, policymakers, mortgage investors, and servicers in helping to avoid downstream foreclosure activity and default-related losses. This is according to Black Knight. When we look at the market in general right now, one of the things that we're having to really focus on is confidence in the market. And home sellers are really struggling with this, and it's showing up in the numbers. 87% of home sellers are concerned that their property won't sell. Now, last month we had 372,000 homes sold in the U.S. That's a really, really strong number. Is it below what it was the year prior? Yes, but you can still sell your home. As we navigate the unprecedented impact of COVID-19, home has taken on added significance, and there are signs that home ownership remains one of the main tenets of the American dream. That's Mark Fleming, Chief Economist at First American. This next slide is really important. It shows to all the sellers who are really nervous about whether or not they can sell their home that showing activity in the U.S. has increased dramatically. In fact, it's surpassed what it was pre-COVID at this point. That is a year-over-year change of 21.4% nationally. In the West Coast, or in the West sector of the United States, that's 19.6% over last year. So the need and the desire for buyers to have a solid home and a spacious home and what they're looking for is extremely important and relevant to this day. In fact, Realtor.com decided to put together their own little housing recovery index, and they basically took the February baseline and then combined these four components to establish an index of how far we've come. And we've almost come to full 100% recovery to the baseline. This is fantastic news for all of the market because it shows confidence in the market. In fact, Zillow reports newly pending home sales up 18.8% month over month. New listings taken up 5.2% month over month. But when you look at it year over year, it's down 20.7% on total listings taken, and new listings taken is at 16.6% year over year, down. That means that we're in a really tight market still. And what that does, and I think this chart kind of demonstrates, is the fact that the number of new listings and the total listings and the total availability on the market has slid backwards some nationally. Part of that is because buyers have been soaking up supply, and other parts of it is that it's just been a demand for property. Now, every area is different. Los Angeles is a hyper-local and hyper unique market, and we're going to get into the Los Angeles market. These are national numbers, so just be aware of that as we go through this. The expectations by all of the major analysis firms and institutions are saying that we shall see an increase in real estate prices over the course of the next couple of years. I believe part of this will be due to affordability and interest rates remaining low for the time being, for at least 2 years. The severity of the inventory tightness should remain a relative benefit to home prices, but it is also a risk factor to the degree of rebound in the unit sales going forward. What does that mean? It means the pricing is still kind of stable due to the severe lack of inventory. At the same time, the number of homes being sold is going to decrease in number. The housing market is likely benefiting from low mortgage rates, stronger demand for larger spaces as more and more people work from home, and a desire to move away from crowded cities to avoid exposure to the coronavirus. We are seeing this in Los Angeles. We are seeing people migrate to the suburbs and urban areas, and we are seeing people leave Los Angeles altogether. Nearly 30% of all respondents living in a high-density urban area says that the pandemic is prompting them to want to move by the end of the year. This is more than double the rate of those living in rural parts of the country, where residents are much more likely to stay put than to relocate. And this is kind of the showing data, year-over-year increases of what people are looking at. They're looking at rural properties 16% more than they were over the previous year. Suburban properties 13% more, and urban properties 7% more. Okay, as we move into our updates here and get into some of the sales numbers, we're going to start off with just kind of the primer and touch back on the distressed property sales again. We are still seeing that distressed property sales are still extremely low, 3%. That is a fantastically low number. This is partly due to what I've touched on before in previous videos, including the fact that 60 to 70% of homeowners out there have 90% equity or more in their homes, and over almost 60% have 100% equity in their homes. This is huge. If you don't have a loan, you don't have a foreclosure. And then you have less than 13% have less than 10% equity in their home. I mean, these are really big numbers. So we're probably not going to see a massive real estate meltdown on the residential side. So what does this mean? Well, when we look at our active listings, we did see that the active listings crept up some. We're at 9,756 active listings for June. The number of pending sales also increased. This is a good sign. It shows confidence in the market and that people are looking and making moves currently. That crept up to 3,325. That's 3,325 units sold pending. And then for the sales, we saw 3,296 pending sales. Again, that is a very strong reversal from the bottom. People were making deals and buying property. When we look at the total for sale and the total closed, we're still pretty low on our inventory overall for single-family houses in LA County. And sales have pushed back up into their lower end of their normal range. This is all a good sign. Part of the lack of inventory is slowing the process down, I would say. Last but not least, this is one of my kind of homemade slides. I do this to kind of show the potential of shadow inventory and month supply in single-family houses out there in Los Angeles County. Currently, what we're seeing, we did see a bump up in the number of properties that decided to cancel their contracts. In fact, it was almost 2,000 single-family houses canceled their contracts in the month of June and decided not to sell. 2,000 properties. That is huge. But the reason why we're not seeing a giant jump in the shadow inventory is because we also saw that jump in the amount of homes that were actually sold. So it's still sitting a little bit higher, but it's relatively low. We're still in the lower 4-month supply. Home prices. So home pricing overall, the median sales price did settle in at $709,000 as the median sales price for a single-family home in Los Angeles County. The average price per square foot also creeped up to $508 per square foot for a single-family home. And this is what I was talking about earlier with the month supply. The current on-market month supply is around 2.9 months, close to 3 months. I think it's higher than that when you start factoring in the shadow inventory that I was talking about before. This is a fun slide. The whole purpose of this slide is to demonstrate the amount of closed sales versus the amount of homes for sale and the average price per square foot. We use average price per square foot to kind of indicate strength in the market. Pricing is still holding, and it's probably due to a lack of inventory. So if you are thinking about selling, now is a great time to put your home on the market and get it out there because there is low inventory, there's low options, and so people who are looking for a home might want yours. Something to think about. Looking at condo prices. The condo market, active listings have creeped up on the market. We're at around 2,866 active listings for the month of June, condos for sale. The pending sales also rose, which is a great sign. It shows that people are entering and still purchasing, bouncing off that low. At 688 condos sold are pending in the month of June. The actual closed sales is roughly 663 closed sales, is just as many as are pending, which means that we should see a solid July as well as people move out of apartments and into condos. The average price per square foot tracked kind of exactly as the new homes did for whatever reason, at around $507 per square foot. This is an average for LA County. Every property is different. Please keep that in mind. As far as the median sales price of a condo in LA County is $485,000. And the month's supply creeped up to 3.7. So what does that mean? I'm pretty sure there's a shadow inventory on top of the condos as well. This is people who were not able to sell, had their contract expire, or pulled their contract or withdrew. I'm sure there's a shadow inventory on top of that as well. Let's take a second and let's talk about apartments. Now, apartments are a really unique product in Los Angeles because the vast majority of the citizens in Los Angeles are actually renters. I decided to just take a quick peek. I had heard some statistics from CBRE and some of the other large firms predicting the pullback in pricing for apartments over the course of the next year and a half. Their rough predictions are that we'll see a sharp downturn and a sharp bounce out, but at the bottom it's about an 8% loss in value in rental rates, which means that, you know, whatever you're paying, if you're paying $100 now, you're probably going to be paying, you might be able to find a place to live for 92% of what that asking price was, you know, within the next year. So I found it interesting, also given that the amount of tight supply that we've had in Los Angeles for so long. And what do I mean by that? When we talk about supply and availability, we talk about vacancy rates, the number of properties that are vacant in percentage. Over the past 7-8 years, that number has been close to 97% occupied, 3% vacant. But some of the numbers I'm seeing right now are just kind of head scratchers. I will say that from what I'm seeing, the vacancy available for lease properties are primarily in newer properties and overpriced properties. Most of these are, you know, $2,000 or more, starting at $2,000 for a studio. So yeah, we're probably going to see a pullback on that pricing. But here's the slide that I pull. I did a quick screenshot of it. I just went to apartments.com and I punched in City of Los Angeles. This is just the City of Los Angeles. And when you look at that number in the upper right-hand corner, 35,779 apartments available. Do you think there's a pricing problem here? Yeah. But again, this is mostly newer construction, newer projects. When I started thumbing through it, it was really just, everything was priced over $2,500 a month. Okay guys, here's the part where I have the conversation with you about spending $2,500 a month on an apartment, even a studio apartment. If you can afford a $2,500 a month payment for an apartment, you can afford a $450,000 condo with 10% down. Call me, please call me. It's a great time to buy. It's a great time to buy a condo. There are people who are looking to sell, and that is a great thing. Okay? All right, guys, that's it for this month. If you have any questions, all real estate is local. All real estate situations are different. Every single property is different. Call me. Let's talk about your own personal situation, what you're looking for or what you are looking to sell. I look forward to talking to you soon. Take care. I'm Dennis Maynard. Have a great day.